Hello everybody and welcome to my monthly Vietnam update. In April, the Vietnamese stock market underwent a significant correction of 8% in US dollar terms. This notable setback was attributed to several factors, including heightened geopolitical tensions surrounding the Israel-Iran conflict, a strengthening US dollar against most currencies, outflows of foreign investor capital, ongoing anti-corruption campaign, and unsettling rumors in the domestic market. Hi, my name is Andreas Vogelsanger and I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you. Global financial markets experienced a widespread sell-off in April 2024, driven by escalated geopolitical tensions between Israel and Iran, fears of supply chain disruptions, increasing commodity prices, and firmer than expected US inflation data, forcing the Federal Reserve to delay interest rate cuts. This confluence of geopolitical risks, inflationary pressures, and a strengthening US dollar against major currencies fueled investors' risk aversion, prompting a flight to safety that exacerbated volatility across asset classes, with emerging markets bearing the brunt of the global retreat from risk assets. In April, the Vietnamese dong, or short VND, experienced a depreciation of around 2% against the US dollar, reaching a record high of 25,333 Vietnamese dong per US dollar. This depreciation was primarily driven by the strengthening of the US dollar, which surged due to continued inflationary pressures in the US during April. The Federal Reserve's decision to postpone interest rate cuts further bolstered the US dollar, causing it to strengthen against most global currencies, including the Vietnamese dong. According to Bloomberg data, many emerging market currencies saw a sharp decline in April, with the Vietnamese dong still outperforming many of its counterparts. Amidst the US dollar strength and the weakened VND, foreign investors aggressively sold stocks in the Vietnamese market. In April alone, the net value of stocks sold by foreign investors amounted to 126 million US dollar, contributing to a total year-to-date net sold value of $500 million US dollar. This substantial selling pressure from foreign investors weakened the market benchmark and caused frustration among local individual investors. In our assessment, aside from the strength of the US dollar, VND currently exhibits robust fundamentals. Overall, the first 4 months of 2024, Vietnam achieved a solid trade surplus totaling 8.4 billion US dollar, marking one of the highest levels in its history. This surplus was propelled by the vigorous recovery of the Vietnamese exports, which has enabled the country to accumulate substantial foreign reserves. Furthermore, Vietnam continued to attract a significant influx of foreign direct investments, or short FDI, with total registered FDI reaching 9.27 billion US dollar and disbursements amounting to 6.28 billion US dollar, representing a 7.4% increase over the first 4 months of the year. This trend underscores the stability and growth trajectory of FDI into Vietnam, which has remained resilient despite the challenges posed by the COVID-19 pandemic. Another contributing factor to the strength of the VND is the remarkable turnaround in the tourism industry. During the first 4 months of the year, Vietnam welcomed 6.2 million international visitors, generating approximately $6 billion US dollars in revenue, reflecting a 68.3% year-on-year increase. According to the Vietnamese Tourism Department, the total number of international visitors to Vietnam is projected to reach 18.5 million by 2025, surpassing the pre-pandemic levels seen in 2019. The sharp decline in April was influenced by the ongoing anti-corruption campaign and the spread of rumors, notably impacting local individual investors who dominate a significant portion of the daily trading volume. Mid-April saw rumors circulating about the potential resignation of a high-ranking political party member, coinciding with the resignation of Vietnam's parliament chairman Phuong Dinh Hue on the 26th of April 2024, citing unspecific violations and shortcomings. Hue's resignation came days after his assistant Phan Thai Ha was arrested on charges of abusing his position and power for personal gain on the 21st of April 2024, according to state media outlet VN Express. In response to these challenges, we increased our cash position from 3% to approximately 16% by the end of April, aiming to leverage opportunities presented by undervalued growth stocks during market corrections. Also, April did not witness a market rebound. We remain optimistic about the strong recovery in May and June, positioning ourselves to benefit from potential opportunities as market conditions improve. The VN index briefly retreated to its 200-day moving average intra-months, but rebounded swiftly, now trading above it again. This movement signals a positive technical outlook, suggesting strength and resilience in the current market conditions. As highlighted in our previous reports, the AFC Vietnam Fund has maintained a strategic focus on investing in export companies and consumer stocks, particularly those with compelling turnaround stories. April saw several consumer companies reporting remarkable recoveries, reaffirming our confidence in this sector. One success story is Hang Sa Corporation, or short HAX, a leading luxury car dealer in Vietnam, boasting a 40% market share in Mercedes vehicles. Despite facing significant challenges in 2023, when the company's profits plummeted by 85% to 35 billion Vietnamese dong from a previous high of 230 billion Vietnamese dong. We are anticipating an aggressive recovery in 2024 and beyond, particularly after we met the CEO back in August 2023. HAX April performance showcased remarkable growth, with before-tax profits reaching 41 billion Vietnamese dong, up 583% year-on-year, marking 3 consecutive quarters of profit growth since the second quarter of 2023. As a result, HAX stock price increased slightly versus an 8% backdrop of the VN index in April, reflecting its impressive profit performance and reinforcing our investment thesis. In addition to HAX, other export and consumer companies such as PTB, furniture exporter, VGG, clothing exporter, and MWG, Vietnam's largest retail store chain, also showcased notable turnarounds in the first quarter. These companies reported an impressive pre-tax profit recoveries, with PTP plus 42%, VGG plus 95%, VNM plus 17%, and MWG published a remarkable turnaround result, increasing its pre-tax profits by 41.9 times. Their performance stands out against the market's growth of around 18%. given that 2023 marked the only negative growth year for the export sector since 2009, and the consumer sector experienced only 1 year of negative growth due to the COVID-19 pandemic in 2021, over the past 15 years, we maintain our patience and conviction in the export and consumer sectors and anticipate these sectors to rebound and flourish soon. Well, this was all from me. Thank you very much for listening, and you're gonna hear from me again next month with another update. Thank you and goodbye.